Hi, everyone. Welcome to the Timing Research Show for May 18th, 2015. My name is David Kosmeter. I am the creator of Timing Research. And today we will be talking about the 86th weekly report. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any past report there. If you're new to Timing Research, basically I've been building a crowdsourced sentiment indicator. I send out a survey each week to all subscribers to ask some questions about uh, thoughts about current and upcoming market conditions, and then I compile that information into a report each week. So be sure to go to TimingResearch.com/current survey later in the week or sometime this weekend before Sunday afternoon, and you can fill out the next survey there and then get the new reports every Sunday night. So I have several guests here today, and Dave Landry of DaveLandry.com hosting again for me, so I'm going to go ahead and turn it over to him.
All right, thank you, David Kosmeter, and thank you to Timing Research for having me back today. We've got, looks like a veteran bunch today and an actual veteran in here with us today, so glad to have all you guys back again. You know the routine. For those of us who don't know you, I'm going to ask you to tell us a little bit about yourself and tell us a little bit about your website. Cameron Yost, let's start with you first in no particular order. Cameron, tell us a little bit about yourself, your trading, and DimensionTrader.com.
Hey, David. Yeah, Cameron Yost here. I'm trading options pretty full time. Trade futures from time to time in the mornings, and
We lose Cameron.
Yeah, looks like we lost him.
Okay, we'll come back to Cameron. While we're waiting on Cameron to come back, Matt, tell us a little bit about yourself. You're trading. I see you. Looks like you're ready to fly out of here. And tell us a little bit about TopGunOptions.com.
You bet, man. Thanks for having me, Dave. Dave Squared.
Glad to have you.
Yeah, glad to be here. Yeah, my name's Matthew Buckley. My call sign's Wiz. You guys can call me Wiz going forward. Obviously, my parents did like me, so it's not my Christian name. But I earned that call sign Flying Hornets for the United States Navy for about 15 years. Founder and CEO of Top Gun Options. Matter of fact, the reason for the flight suit, jumping into character here, I'm giving a keynote to about 960, let's just call it 1,000 sales folks and executives out here in Vegas at the Palazzo for McKesson. So getting one of the cool things about Top Gun Options is in addition to the the methodologies that I learned flying fighter aircraft that I apply to trading. I've been trading equity options for my God, over 20 years, is having a strategy, being disciplined, not being emotional at all. When something hits a certain point, whether it's good or bad, you exit. You don't think about it. Having a contingency plan, all of that I apply to businesses as well. So one of the advantages a lot of folks at Top Gun Options get is that I get to work with a wide swath of companies. Next week I'll be out in San Francisco working with VMware. Worked with a pest control company a couple of weeks ago, so I get to see a lot of what's going on in the economy before it ever bubbles up on Comedy Central. CNBC, I call comedies CNBC Comedy Central. So before they even hear about it, that's exactly right. So yeah, happy to be here, man. Thanks again for having me.
Well, cool. It's you just got me thinking. I've met a few unsuccessful airline pilots who aren't successful as traders, but I've never met an unsuccessful fighter pilot. You guys, you know that sometimes you just have to do certain things whether you want to or not, and you do them. So
we're gonna win.
Great analogy.
We're gonna win, or we're gonna die trying, man. So
yeah. Hopefully I'll get to check out that keynote. That sounds pretty interesting. Cameron, let's go back to you. Looks like we got you back on the. I guess the squirrel got his nuts caught in a wire somewhere between us and you. So let's go back to you and tell us a little bit about your trading and tell us a little bit about DimensionTrader.com. Oh, did he go out again? All right. While we're waiting on him, let's go Let's go over to you, Michael. Michael Filighera of logicalsignals.com. Tell us a little bit about yourself and tell us a little trade. Cameron, we'll come right back to you when we get you back online.
Hi, Dave. And
Hi, Michael.
thank you guys for having me on today. Logical Signals is a website that I started based on requests from friends and other people that wanted to have a place to trade. So it's kind of a think tank because I am an ex-floor trader. I was a market maker here on the Pacific Exchange. I was a market maker in London, and also as a market maker in Amsterdam. And there's a certain camaraderie or just the ability to discuss strategy and just kind of work things around a crowd. And so I got enough requests, and so I started the room. And basically what we've decided to do is to just adopt some basic strategies. And so I use those, and we're basically just trading futures at the moment. But I also trade options. And one of the things that we've added to our arsenal of things that we bring to the trade room is that we take a look at the psychological and emotional impact that trading can have on people, and what possibly could be blocking them from being consistent or returning to being consistently profitable. And so we've added a key psychological factor to all of that as well.
Yeah, I often, when I talk about psychology, I say now we've come to the most difficult part. You're probably what's keeping you from being successful. So, big fan of psychology stuff. So I think that's good stuff. All right, Cam, we're going to try one more time. Looks like we can see you now. You nice and bright. You got a little halo around your head. All right, Cameron, back to you. Tell us a little bit about your trading and tell us a little bit. Stay away from the light.
I know. I had to change computers here, so the background on this one here is terrible, and I apologize for that.
No worries,
my other computer got a better background, but apparently it's not working today. Yeah, I've been trading off and on all my life, and I'm an active options trader, as well as trading futures. I like to do that in the mornings for a little bit. I'm involved with a company called Dimension Trader, DimensionTrader.com, creator of fantastic indicators, best used for trading futures, and that's about it. I'm just one of these guys that enjoys the markets and try to stay on top of everything. I tell you what, we got credentials. We got a great group of people in here today. I'm very impressed with the depth of what everybody brings to the table today. It's very impressive.
Yeah, I mean, it sounds egotistical, but I always learn a lot from these shows, and that's why I enjoy doing them so much. I'm glad David keeps bringing me back. Thomas, let's go over to you. Thomas, is it DeLello over at orderflow.edge.com? I'm sorry,
yes.
orderflowedge.com.
Yep, you got it.
Okay.
Good stuff. Pleasure to be here today.
Glad to have you. Glad to have you back.
Yes. Thanks for inviting me back to share my market perspective with you. Pumped up to be here. I'm the head trader and founder at orderflowedge.com. I've been in the market since the mid-'90s. I've been around the block a few times. A good portion of my early years was spent running in circles, jumping from one thing to the next, just like everybody else, trying to find my way, so to speak. I've been exposed over the course of my trading career. I've been exposed to and I've spoken with a lot of different people over the years about trading. I've talked to elite traders who trade profitably. I've talked to a whole lot of regular traders who consistently lose. And over time, I just came to the realization that elite traders, let's call them the smart money, the 5% of traders who are consistently profitable in the business, they talk and they think differently about the market, 100% different. It's like elite traders talk about this and everyone else talks about that. It's almost like we're playing a completely different game, but we're not. We're all trading the same markets. We're all playing the same game. The smart money just understand things differently from everyone else. So suffice it to say, I came to the realization that the challenge in becoming a successful trader, and this is the mindset that we employ in our trade room every day, is to understand the actions and strategies that the HFTs and the successful traders employ. And understand how they differ from those of the unsuccessful traders, and do our best to emulate what the successful traders are doing as closely as we can. You know, and that boils down to trading in the direction they're trading in the areas that they're trading in, you know, in terms of wholesale and retail value in the market, and basically using order flow information to confirm their activity.
Cool. Cool, good stuff. Yeah, I like what you said about we all kind of go through this holy grail hunt, and I actually wrote about that this morning in my column. And once we find our way, we realize that maybe it's not as difficult as we tried to make it. So I think that's good stuff. And
yeah, that's important, and I think traders tend to make it complicated, and it really doesn't need to be. You know, and
yeah,
I think the main reason most people make it complicated is because they're looking for certainty.
Yeah,
you know, you're never going to find it, but you have to keep piling information on top of information, indicator on top of indicator, and you're never going to find that certainty.
Yeah, you reach a point where you can no longer see the chart, and I get charts like that all the time emailed to me, and I'm like, where's the price bars? You know,
yeah.
As I wrote a while back, if you want to guarantee, buy a toaster. I don't want to take up too much time since we have a lot to cover today, but DaveLandry.com is my website. I've been trading for 20-something years. I stopped counting around 20 years because I realize I'm getting old. I have a 21-page report on my methodology. If you're interested in that, go to my website under products, under free reports. It's up there, and I'll be adding some new reports really soon, so check back often on that. Basically, I believe that you can only predict the short term when it comes to markets. If it's in the analogy I often use is if it's cloudy and thundering, you know it's going to rain soon. And being in South Louisiana, in fact, it looks like it might be raining before the end of the show. But you don't know if it's going to be raining this time next week or next year. So in the markets, I think only short-term forecasts are viable. It doesn't mean you can predict the market every day, but when you get certain patterns, and I'm a pullback trader, it's reversion to the mean, trading in the direction of the trend. In other words, we trade pullback. So we take a short-term profit, we get that stop up to break even, and we stick with it as long as it moves in our favor. We've got about, I think, 11 open positions right now, and quite a few of those we started putting on way back in September. So we'll hold on to something as long as it moves in our favor. Take a little profits along the way. People often ask me, is my money management techniques statistical or psychological? And my answer is yes. Anyway, it's all in that report. If you have time, take a look at it, and the rest is just details. All right, let's go ahead and go to question 2 for the week, and let's start with you, Cameron. And two-part question. First part, based on any technical or fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower this week? And that's the close of May 22nd. And then once you give us your answer on that, go ahead and rank your answer on a scale of 0 to 10. Rank your confidence, with 0 being no confidence and 10 being extremely confident. All right, Cameron, to you.
Well, my best guess is that the S&P is going to go close higher. I'm a higher guy here this week, and my confidence rating is 8.
8, wow. That's a good one. Okay, fantastic. Okay, and we'll have a follow-up question on why you think that, so just hang tight. We'll come back to you on that. Wiz, let's go to you. Higher or lower this week, close of Friday, and rank your confidence on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident.
Higher or lower? The answer is yes. I think we make a excuse me, a round trip. So I think it's flat. I think we're going right down the fairway. And I'm gonna go with an 8
Something
on
I've
that
never
as
done.
well. Yes, exactly. Yeah, no, I'm gonna go with an 8 right down the fairway with unched by Friday after the round trip.
Well, I think Dave is looking for it up or down, though. That's the only problem.
Slightly up. We climb a wall of worry, but we're gonna chop. But I'd say, obviously, barring something horrific, the bias has got to be to the upside.
Okay, and confidence?
I'm gonna go with that Ocho as well.
Oh, there you go. All right, interesting. We did have 1 or 2 10s on the show once, and I forgot what happened afterwards. So that'd be interesting to go back and see. Michael, let's go to you. Same question. You same bat time, same bat channel. You know the routine.
I do, and I'm going to agree with Matt and basically say that I think that we will walk that or climb that wall of worry, and much will depend on what the algorithms and how they interpret the FOMC minutes on Wednesday. But based on that, I believe that we're going to probably climb higher to midweek, and then I actually believe that we will end lower on the week, and I'm also going to give that an 8.
Okay. Okay, Thomas, same thing. Let's go to you.
Yeah, I mean, I know you like controversy, Dave, but I'm pretty much in agreement here. You know, I mean, we got the FOMC on Wednesday, the minutes. You know, the market, like everybody else says, it just keeps climbing this wall of worry. And right now, you know, I look a lot at short inventory and long inventory in the market. And right now, you know, the market is just unbelievably filled with short inventory, and it's hard for the market to top out with very little in the way of long inventory and all these shorts, because all those shorts that are here, they represent a lot of potential demand above the market here. So, you know, I hate to, you know, I'm not one to predict. I hate to say this is going to happen by a certain day. I think it's very hard to do that. And you know, but if I had to, I would have to lean towards continuing to squeeze shorts here into the end of the week and then topping out probably sometime towards the beginning of next week sometime.
Cool.
And I would go with probably a 7 on that.
Okay. Okay. Was that an up or down? I didn't write it down.
Yeah, up into the end of the week.
Okay.
And then looking for some downward movement coming into next week.
Okay, cool. I guess I'm kind of jumping a little bit ahead here because of the we'll have time to elaborate on the next question. But one thing that I find fascinating, and one thing I believe in, is everything works better with trend. And this market's been in a trend forever. And instead of trying to outsmart it every week, at least after a few weeks of doing this show, I just go with up as long as the market looks halfway decent. And just simple metrics like the 200-day moving average, we have daylight meeting at the lows or greater than moving average. And what's kind of fascinating is if you go back a couple of years, we've only had a couple of days of daylight, maybe 5 total, way back in 2013, going back almost to 2012. So based on that metric, it's headed higher, and I'm just going to keep, I like to err on the side of the trend, as I wrote about this morning in the column. And we're at all-time highs right now, and as long as we're banging out those all-time highs, I'm not going to fight it. It just seems like everybody wants to poo-poo this market every time it begins to go down a little. Now it's not a perfect world. There are some problems out there, and I'll get to them on the next on the next question. But I'm going to go ahead with up, and I'm going to give it a confidence of 7 on that. The other thing, too, it is a holiday week, and it's too bad we don't have Rob Hanna's on the show quite often, and he does a lot of research. We'll have to ask him, but usually a holiday week tends to have a bit of a seasonal bias to it, so that'll be interesting to see what he would have to say on that. Okay, we're going to go to question 1, which is basically to elaborate on your first question, or question 2, I should say. What developing events, they could be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets? Let's go to Cameron first on this one.
Well, I mean, everybody's kind of touched on all of this. I tend to believe that, I mean, we're, especially with the trend, when you err on the side of trend, we're moving up, and I think right now we're above our all-time highs right now. I don't know where we're going to close today, but the you know, if we close higher, I think technically, I think we've broken out here. We got all those shorts that may come about, start to cover later on.
Yeah.
But I think the real key is news. I think this week's going to be news-driven in my mind, and it's going to be Wednesday. I think we're going to chop around until FOMC minutes come out, and then I don't think there's going to be any surprises there. The market always interprets nothing as good news.
Yeah.
You know, it looks like if they're not going to do anything till fall or winter, I think we're just going to, and the technicals are behind us here. I think this thing could let loose and go. And that's what I think is going to happen. But I think the whole thing's keyed on that. We have a lot of news this week. Tomorrow's building permits. Of course, Wednesday's the FOMC. Thursday's unemployment, PMI, and we got consumer price on Friday. So there's a lot of stuff in here this week. But you know, it just seems that bad news has been good news for this for this whole thing. And you know, so there we have it. You know, it's going to be an interesting week, but I think we're just going to be holding on until Wednesday. And then the fact that it is going to be a holiday next Monday, traders are going to try to get out of here early Friday, I think. So, you know, it is what it is.
Yeah, no, I hear you. I think that the Fed's going to avoid doing anything until a gun gets put to their head. The new Fed is, let's just see if we can make the market go higher, as opposed to
Yeah.
fiscal responsibility. But that's another. That's like we were talking pre-show. That's a story for over a beer, I guess. Wiz, let's go to you. Same thing. What developing events that can be technical or fundamental? What will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Well, I think Cameron nailed all of them. The main thing I'm going to be following this week, there's a couple, I think one's in Latvia, I forget where the other one is, but the whole Grexit. I think the market is slowly coming around to the fact that whether it's a Cyprus-like bail-in or the end game here with what's going to happen with Greece. I think, along with obviously all the macroeconomic events here in the United States that Cameron laid out very well, it's the Grexit. Even with the strong dollar today, we're seeing the gold catch a little bit of a bid here, and I think that's on that fear of the Grexit. So. So yeah, like I said, I agree with everything that Cameron said. We got the home builder sentiment out this morning. Barring, as I think we're all going to agree to, we really are in this bizarro market where good news is good news, bad news is good news, and awful news is great news. And I told my traders we had a weekly options live trade brief this morning, and of course I got a little bearish on Apple this morning before Icon jumped in with his size 12 shoes. But I call it a blazing saddles market. You remember that scene in Blazing Saddles where the sheriff puts a gun to his own head, and they're like, "Oh my God!" He's just crazy enough to do it. I think the inmates are running the asylum. I think the Fed. If you don't think the Fed has CNBC on or knows how the market's reacting, it really is the tail wagging the dog. So every time we get some little ripple of reality, the market goes through a temper tantrum, and they go, whoa, just kidding. It really is soccer on a Saturday where every kid's going to get a freaking trophy, and we're never going to be able to lose. And the bad is that actually when we do start to lose, there's nothing going to be there is not going to be yelling but that's going to save this market. So I got my AR-15, I got my water, my bullets, and my butter ready for my place in Montana. But until then, you can't fight the tape, and you go higher until the music stops.
Yeah, true military guy. I mentioned bullets. You got all these rednecks down here, and it's like they tell you how many guns you have, and you say, "Well, how many bullets do you have? Bullets?"
Yeah, exactly.
What are you gonna do with the gun? Beat somebody over the head? Exactly. Anyway, but again, that's another beer conversation for a beer. All right, Michael, we hadn't forgot about you. Let's go to you next. Same question. You need me to repeat it?
I'm more of a technical trader and also a technical analyst. And I think technically the market is working its way towards an additional short-term top. And that's why I figured that we probably would continue to climb that wall of worry and then pull back. Now, I don't think that the market's going to pull back anything significant, but I tend to also look at volatility, and volatility is kind of telling me that, they're likely going to start to pull some stops out here. And so we may see something a little bit more significant to the downside. But I do not disagree with what has already been said. I think that we cannot eliminate or pass by the fact that the market is short. And based on that, we start to continue to tick to new all-time highs, and eventually either your clearing firm or the trader themselves is going to be called into action and either forced to cover or they'll just be taken out. I think that when we get players like Carl Icahn stepping in, I think he steps in, and this is a great call by Matt. He steps in, but that doesn't mean anything other than people are they're going to pile in after on what he said, and quite often I think it's like, well, you really got to understand Carl Icahn. He makes that type of a statement, and he's the seller.
Correct.
So, he wants to get out, and he wants to get out at all-time highs, whether Apple does it in his favor or not. But I believe technically that the market is reaching a very near-term top, and therefore I think that's why I'm calling it lower. And so on the technical basis, I think we will head lower.
Gotcha. All right, Thomas, let's go to you. Same question.
Yeah, I mean, I'm for the most part a technical trader. I feel that most fundamentals are priced in, except when something unexpected comes around. You know, you get these bigger events that come along that can really shake the markets up, and they kind of cloud the context. And right now we have two, like everybody mentioned, the Greek situation and the Fed. You know, but here we are. S&Ps are up 3% year to date. And as the first quarter of 2015 earnings season kind of winds down, overall it seems like earnings did not fall as much as Wall Street forecasts expected. So, you know, we saw the market kind of set up for a nice short squeeze last week, fueled by cash market strength because of the better than expected earnings. And the cash market provided that ignition that the market needed to kind of barbecue all the shorts, all the short-term shorts especially. In our trade room, we've been talking about this for a while, about what we call the short commitment in the market. And there's been an extremely heavy short commitment within this S&P range of, say, 2110 down to 2050 from early March. And shorts have been aggressive in building inventory to the downside, but they haven't seen the price improvement that they've been looking for. So as the market heads back up above 2100, here we are 2120, and again makes all-time highs, you know, these shorts start to get nervous, and there's still an awful lot of shorts trying to hang on, but all these shorts equate to a lot of potential demand because they have an uncle point, and at some point, if the market continues higher, they're gonna excuse my French, puke them, you know, buying back.
Yeah.
So it's not ideal conditions here for the market to top out. You know, the market tends to top out with bulls popping corks, you know, and with a lot of confident longs who wind up getting stuck at highs, and then they provide fuel for the market to sell off, and we just don't have that right now.
Yeah.
You know, so again, it's the Fed speak. Wednesday, there's going to be a lot of eyes on and ears on what the Fed says, and we'll see what happens with that and Greece.
Yeah, I like what you brought up, Thomas, about the shorts, and in fact, everybody else mentioned the shorts here to rip off Ian McAfee. I can never say his name. Academy. It'll be a diaper change moment for him because they seem to be betting on this market to fail big time. And the other thing is, not that you want to buy a market solely on this, but I think a lot of people are going to have a little FOMO, a little fear of missing out if this market continues higher.
Yeah. And it all provides fuel. And the other thing is there's a lot of hedging going on too in the market. That's where a lot of this S&P short inventory comes from. But it's the same thing. If you put the hedge on, the market continues higher. It's lost money. So.
Gotcha. Just let's see if I can get my screen shared real quick. What has been having me concerned, or I've been concerned about, is we have a bow tie down in the Russell 2000, and that's where you have a 10 simple, a 20 exponential, a 30 exponential moving average come together over a short period of time. When this happens after an all-time high, it can be a very significant sell signal. Now, not every one of these emerging trend sell signals will turn into the mother of all tops, but every mother of all tops will have them. And the reason you don't want to rush out and sell a market just because you have a signal. You want to wait for some kind of trigger. And the reason you wait for a trigger is if it goes right back up, it'll negate the signal. Now, as I've been saying quite a bit, a couple of big up days will make all the difference in the world. And as I said, and a couple of you guys said today, err on the side of the trend. So let's not rush out and start selling just yet based on the action in the Russell, but I am paying attention to that. I just want to show you one or two other markets too. Obviously, bonds have been headed lower for quite a while. They bow tied way back in February, and you can see, as people call me a trend following moron, we've got a pretty serious downtrend so far in place here. It's not the absolute level of rates. If they go from 0.00001 to 0.00015, it's not going to make a difference as far as the absolute level, but the delta or the change in rates could get people a little nervous. And just one other chart. It's kind of funny you guys talking about Greek.
Looks like Dave dropped off there. Oh, it's back on.
And that concludes the secret of trading.
That's good.
Never to be told again.
No, what'd you say? We missed it.
Okay, let me just show you real quick. Sometimes, I don't know when I got cut off, but sometimes it's trader, and I'll see if I can get the chart up. Sometimes as a trader, what happens is you'll get a setup, and you have to take the setup. And it's kind of interesting. You guys mentioned Greece. Am I out again?
No, you're on.
Okay, cool. And somebody mentioned Greece. Oh, here we go. And what's kind of fascinating is that, let me see if I can get Greece to pull up without ruining everything again. We actually had it's kind of what I call the Steve Winwood trade. When you see a chance, you take it. And I avoid all news, but if you take a look at Greece, we've got a bow tie here off of all-time lows, kind of triple bottom looking, or I'm not a huge fan of 3 drives to a low, but it does have that kind of makeup to it. I just call it a triple bottom. And you've got this nice little bow tie off a low. So I think that we could see a possible double or something. Am I getting a margin call? Leave me alone. I don't know. You tell these people every Monday. I'm in a webinar. Anyway, I think that so Greece is kind of actually looking pretty good here. I don't know how it's going to play out. So there's definitely some cross currents, and we should probably brace for some volatility here. Like you guys pointed out, the shorts are going to get squeezed in here, and but rates are going up, and then there's this big question mark with Greece. And but so far, Greece is looking pretty good. I'd rather be long a market where everybody's saying it's going to be the end of the world for that market than to be long a market where everybody's popping the corks, as somebody said earlier. So we're still long Greece at this juncture. Okay, let's go to the last question here, and we're going to send it over to you, Cameron. Once again, you'll start off. PayPal is in the process of being spun off from eBay, and later this year we'll go to trading under the formal symbol PYPL. After the move, do you think the company will provide good trading opportunities or be a good long-term investment? And that's you, Cameron.
That's that's a good question. I think PayPal. Obviously they dominate that market that they're in as what they do. There's going to be some competition, in the years to come. If they can maintain their market share, they'll be a decent, investment. Whether they're worth trading from time to time, that remains to be seen. We'll watch it once it starts trading. But I think the key from an investment standpoint is going to be if they can maintain their market share, which they dominate right now. But I'm not sure that's going to continue as time goes on if we're looking at an investment. So I don't know the answer to that. We'll watch it. We'll watch it when it starts trading, and if it appears to be a good trading opportunity, then here at our end we'll be getting involved. There's no question about that. But again, just to repeat, I think the long term is dependent upon their maintaining their market share.
Yeah, it's interesting you brought up market share. I was reading about search engines recently, and they were talking about Alta Vista, or one of those guys that was one of the biggest market share, had one of the biggest market shares back in the day, and I don't even know if they still exist. It's kind of interesting that you brought that up. All right, let's go to you, Wiz. What do you think about this PayPal thing being spun off from eBay later this year? And after the move, do you think either the company will provide good trading opportunities or be a good long-term investment?
No, I don't. I'm a seller of that whole thing. eBay, PayPal, both smacks of an Alta Vista of a 2000. People love Lucent at 100, 90, 80, 50, 70, and 10. I just think. Enron. Yes, exactly. I was having dinner with an executive last night who was at Tyco when Kozlowski was there. So I'm not a PayPal guy. I'm not an eBay guy. I traded them a long time ago. I don't think they're the future of any of this pay. I think you got to look at Apple Pay. You got to look at the heavies. The Facebook, the Apples, a Google. If anybody's going to make any sort of type of those online payments or anything like that happen, PayPal to me still sounds like a Western Union. So I think it's a has-been. If any, here's what I would do. Dave, you asked if it's a long-term investment. If anything, I'd throw some 2017, or if the 2018s are out by then, some leaps on it. Some 80 delta, deep in the money calls, and put them in a safe deposit box and forget about them. That would be a lottery ticket, because I think they'd end up getting bought by one of the Death Stars that I just said. But standalone, I'm a 50 delta if it's the long-term investment. No thanks.
Gotcha. All right, Michael, same question.
I am going to echo what Matt just said. I think that PayPal, as a standalone, may provide some really great trading opportunities initially when it's spun off. But I would be looking to build shorts in that in any type of a long-term time frame. I don't think that it will last. I agree with what Matt's saying. I think that the outside competition is much better funded and much better prepared to move in and take the market share away from PayPal. I think that eBay as well screams to be sold. And so I think that on a long-term basis, it's going to really prove that it was likely PayPal that supported eBay, and not vice versa. So I think that eBay will also continue to really start to come off of these highs, and possibly very dramatically. And a lot of that's going to be based on the fact that you got Amazon that's coming out and really starting to put out a similar platform for people to go in and sell on Amazon.
Exactly.
And Amazon's got it down way better than eBay does, and so I think that eBay's kind of cooked. And I think that spinning up PayPal might be Ms. Whitman's final play. So I am a seller on both.
Gotcha. All right, Thomas, same question.
Yeah, I don't really look a lot at individual equities, but I'd have to say, I think that eBay recently had reported earnings, and they reported stronger than expected, but I think a big part of that was from PayPal's strength in the payments business. So I think eBay's marketplace is definitely declining. If I had to pick one out of the two, I would definitely go with PayPal. I have a lot of personal experience using PayPal. It's the dominant platform right now in financial transactions on the internet and stuff. So, I think I'd be interested personally in PayPal, but I would probably stay away from eBay. I think PayPal's got some good potential to it. I don't see any real. I mean, there's a lot of different payment processing out there, but I think PayPal is still number one until something changes there. Whereas eBay has been falling off for a while, and I think it's going to continue to fall off.
Yeah, I mean, they're the dominant player. And I guess the question you have to ask yourself is, where do they go from here? And
Right.
and like the other guys pointed out, you've got competition coming, and so it's going to be hard for them to gain market share at this point without eBay.
Yeah, their revenue recently gained. I don't know over what period this was. I think I read somewhere they recently grew 14% to 2.1 billion.
Wow.
PayPal. So I mean, listen, they're the strong arm in the business. And again, I mean, yeah, a lot of people complain about their fees. Again, talking from a personal standpoint of using them, but they're reliable. I've never had any issues with them, and I do a tremendous amount of my personal banking with PayPal. So I don't see them falling off anytime soon. I don't know, unless something else comes up, maybe something with Amazon as someone else suggested. But in the meantime, again, I would look to PayPal, but I think I would definitely stay away from eBay.
Okay, gotcha. Yeah, that's a big part of my business too, and I hear you on that. I'm a big fan of trading IPOs. I just recently did a course on IPOs, and I have a YouTube out there, actually a couple of them, but one more recently we did last week or week before, I forget. And one of the things I wanted to point out with the IPOs, and it's all in the video if you get a chance to watch it here on YouTube. My channel is youtube.com/C for custom/Dave Landry. And one thing that I've observed, and it's pretty amazing if you have a chance, take a look at the charts after the show, is most IPOs will form a significant high or low in their first week of trading. And it's like they take them public, and they either fail miserably or they take off. But you don't want to do anything pre-IPO. You want to let them trade for about 5 days and see what happens. And you'd be shocked at how many bad trades you could miss just by letting that IPO fall out of bed and not even consider it until it takes out that first week of trading. So that's what I told everybody in the webinar. If you don't walk away with anything, just write that down and go in and look at the IPOs, and it'll keep you out of a lot of trouble. So I'm a 100% technical guy. It is kind of fun to talk about all these things and speculate, but it's just speculation until I have a pattern in the chart.
Well, Facebook was a great example of what you just mentioned. You know, Facebook went right out of the gate up to 40, and then back down to 20, and then lingered there. And now where are they? I haven't even looked at them recently, but up to what, 80, something like that. Yeah, I mean, you could
go throughout history and see how this happens over and over again. Like Twitter just bombed when it first came out, and then once it broke out, then it really took off. So there's a couple little breakout patterns. I'm not a breakout trader, but breakouts actually work at IPOs if you wait for that first week. So I'll keep an eye on it for the first week, see what happens, and if it begins to break out, then I might be interested in it. But I'm more interested in an IPO that's a little bit more exciting, and it's kind of like, where do they go from here? They might have some growth, and 14% growth, that might be possible, but I would prefer, as a technical trader, I actually prefer companies with bad fundamentals. And one of the IPOs we were long recently, I think it's Trill, T-R-I-L, it pretty much doubled. And I looked at the earnings on it, and they were about $50 a share. I looked at the earnings, and they lost $3 in the prior year. So they trade purely on emotions. They're going to solve some problem or have some great whatever. It was a biotech. They're going to cure Ebola or whatever the disease of the month is, right? Whereas PayPal, it's like they're PayPal, there's competition moving in, what's going to happen? So there's not nearly, not that I confuse the issue with facts on this, but there's not nearly the excitement as some of these other little IPOs out there. So give it a week or so to trade, see what it does, and then look for setups afterwards. Okay, let's go ahead and get some closing thoughts from you guys. Cameron, you're first again. Any closing thoughts? Anything else you want to tell us about DimensionTrader.com or your own trading or the markets? Anything you want. Floor's yours.
All right. Well, I tell you what, this is so exciting. You got me motivated for the week, so I don't think I'm going to go into the white light quite yet.
Good. Well, maybe Cosmin will have you back in a few weeks.
Well, and if that happens, I'm going to make sure my background's a little different. That other computer, we'll have that dealt with. But no, I think it's going to be like we just said in summary. I think Wednesday is going to start the week here, as far as we're just going to be chopping along until then, I do believe. But well, DimensionTrader.com, I want to just briefly state we got 38 proprietary indicators. If you like scalping futures, it's great indicators. We put together 3 or 4 really good trading methods using our indicators, and I encourage everybody to go to the website, take a look at it, DimensionTrader.com. We actually have a training room that's open 3 days a week, Monday, Tuesdays, and Thursdays, and you'll see there how to sign up, and we'll give you a guest pass for a week, a little bonus. In fact, I think David's going to send out some stuff when this is concluded with the recording and everything, and the link will be on there. Just click on that, sign up, and we'll see you in the training room as a guest for a week, and you can see what Dimension Trader is all about.
Cool. All right, Wiz, to you. Any closing thoughts? Could be about anything you want. Floor's yours.
I can't believe you gave out that secret to trading, man. I mean, I'm going to be a billionaire now. Thank God I got all that.
You're welcome. You're welcome.
No, thanks, the Dave Squared duo for having me. Top Gun Options Thursday. I'll still be out here in Vegas, but at 1 and 8, we're going to do some live trading, obviously during the day, and then a training session at night. Kind of like what Cameron said they do. It sounds like all of us at the end of the day, we all want to go out and shoot down MiGs, but we're all going to fly and fight the jet just a little bit differently. But we want to see some puffs downrange on the horizon, though. So yeah, give everybody a lot of 500-pound heads on the webinar today. So I'd check everybody out. But yeah, you can go to TopGunOptions.com. One of the takeaways, and I'll talk about on Thursday in our live trading session, I take a look at the GLD this week. You want to talk about emotions. The GLD is an emotional trade. There's no CEO, there's no EBITDA, there's no earnings. You can't eat it, you can't fly on it. Maybe you can put it in a pillowcase and swing it around and beat somebody with it. But gold is an emotional trade, and as all of us kind of hit on in the session this afternoon, it looks like it Greg's it. If it doesn't have it's the Steve Austin $6 Million Man thing tumbling down the runway here. It's going to suck, and I think seeing the action in the GLD today with a strong dollar and gold still up, that's an indicator to me. Like when you see market up, VIX up, that's kind of a hold your nose rally. So I'd be taking a look at the GLD, maybe getting a little bit long here if we are going to see a Grexit. But Dave Squared, thanks for having me, man. Mike, Thomas, Cameron, look forward to working with you guys down the road as well. Appreciate listening to your commentary.
Yeah, well, it's always great to have you. Break a leg in your speech later today. He's giving us a secret of trading right now. All right, Michael, let's go to you. You know the routine. Any closing thoughts, anything else you want to tell us about logicalsignals.com, your trading, the markets, or your birthday? Happy birthday.
Thank you very much. I tend to focus on crude lately, and the primary reason, and I've actually added the 30-year bond back in, and the primary reason is because I enter those markets without having a defined ability or a defined number of what the fair value of crude should be or what the fair value of the 30-year bond, the basket, should be. And I find that when I go over and I trade equities such as the NASDAQ or the S&P or even the Russell, I have a pretty defined reasoning in my mind that to sell them, basically. And so I can get myself into trouble because, frankly, I think at the moment what's really in control of our markets are algorithms. And until the algorithms really get changed to focus more on selling instead of buying, I think that we get the type of moves that we get right now because an algorithm has no concept of what's overbought or what isn't overbought. But I have found that when I slip in and I do crude, I have a lot more fun. I enjoy the moves, and I kind of stick away from equities right now. Although I just kind of, while we were talking, went in and into the NASDAQ as it slipped up to new intraday highs, and it's just an old market maker thing where I just sell. I sell new highs, but I'm only looking to really capture, go grab a point.
Yeah. Yeah, I hear you.
It's a day trading trick. So
go ahead.
So that's really about it. Right now, I think that I'm not really looking to put any long-term plays on, and so I'm just in it for the day, and that's my focus.
Okay, I'm a bull on oil. We're long USO, and it's made a nice little emerging trend pattern. Also, the bow tie, what I talked about earlier, off of major lows. And when I'm not a big fan of any efficient markets like oil, I like little inefficient stocks like small IPOs and small companies in general. But every now and then, an efficient market like crude oil can make an inefficient move, and I think that we could see that happen fairly quickly. And could crude double? Sure. I mean, why not? It's been there before. It's done that before. There's, like you said, it's kind of hard to put a value on what it should be.
Right.
Thomas, let's go to you. Any closing thoughts? Anything else you want to tell us about orderflowedge.com? The high frequency was mentioned a minute ago. I know that's your wheelhouse, so to speak.
Yeah, we pay a lot of attention to trying to hone in on what the smart money and when we talk about smart money these days, we're talking about high-frequency traders in the time frame of intraday trading. But, our edge is based ultimately on understanding that order flow is what drives price. We're crunching the order flow data to find value and opportunity before everyone else sees it. We're basically seeing what the smart money looks at. We're seeing what the HFTs are looking at in terms of the order flow, in terms of where they perceive value to be. Order flow is what drives price. I look at price as the result, as the after effect of the order flow. And when tracking the order flow, you can see the buying and selling that's causing price to move. And as you begin to see that on an everyday basis, you can also begin to understand and identify where the opportunity is in the market. So, we're thinking in terms of the market just being a series of stop runs, one after another, all day long, every day. And we're using the smaller machine-driven stop runs to align ourselves with the bigger stop runs in the direction of the main order flow trend. No need to complicate it. There's really a very simple elegance to it, but in order to get in tune with it, you have to learn how to think and act like the smart money does, the professional traders. We're going to have an open room, I think, let's say on Wednesday. There's a link, orderflowedge.com/open room, where you could just send an email to support@orderflowedge.com, but we just scraped the surface here today, but if we talked about what we talked about here today resonates with you, We'll have the open room Wednesday, I think, at 10 a.m., and that'll give us the opportunity to go into things a little bit deeper and for you to see us in action real time with live charts. And essentially what we're going to be doing is just showing you the information that we use in order to trade, the order flow information that's coming from the market. And that's what it comes down to.
Cool, cool. That's fascinating stuff. I'm still a bull on the energies. I'm still a bull on Brazil and Latin America. Still a bull on some of the commodities like steel and iron. I will be keeping an eye on gold, like Wiz said a few minutes ago. And these second-tier China stocks, I know people are saying would these fly, but I've seen a lot of these low-level China stocks that have been beaten up. They've been having some nice moves lately, and we've been riding those trends, and that's worked out pretty nicely for us so far. My website's DaveLandry.com. If you want to start for free, there's a lot of things you can do on my website. If you look at education and scroll down to free education, I have quite a bit of information there. I have over 1,300 videos up on YouTube on trading, and every couple of weeks, every 2 weeks roughly, we do a new educational webinar on a specific topic. And the last one we did was on, or one before last, I should say, was on trading IPOs, and that's where some of this information that I mentioned earlier came from, or within that webinar. I also do what I call the weekend charts every Thursday. It's free and open to all. Anyone who wants to bring their questions or come throw in their 2 cents too, feel free to do that. It's every Thursday at 11 o'clock Eastern. And then just sign up on my website. My countdowns right now, I need to reset them over the weekend. We changed servers and they got messed up. But just look for the countdowns. The links are all current, even though you have 0 on those. Anyway, I think that's enough from me. Let's turn it back over to David Cosmitter. Obviously, all you guys here, I want to thank all of y'all. I think we'll let David name you in your websites himself. And David Cosmitter, thanks once again for having me and as your host to this, and thanks again to Timing Research too.
Thanks, guys. Yeah, great show. I want to remind everyone who's watching to go to TimingResearch.com/reports to check out this or any past reports. And later in the week or this weekend, go to TimingResearch.com/current survey to fill out the next survey, and then watch for the next report that are published every Sunday evening. Next week's show is going to be on Tuesday because Monday is a market holiday, so just a reminder on that. And for this week, I just want to thank my guests again for being here. Michael Filighera of LogicalSignals.com. Happy birthday. Thanks for being here on your birthday. Thomas DeLello of OrderFlowEdge.com. Cameron Yost of DimensionTrader.com. Matt Buckley of TopGunOptions.com. And, of course, Dave Landry of DaveLandry.com. Thank you for hosting again.
Thank you.
Thanks
everyone again. Thanks again. Great to have you guys here.